Carbon credit markets are optimistic about the year ahead, with more corporates like banks and traders coming on board to offset their emissions. Even so, market watchers say that challenges remain over the legitimacy of green projects that are being funded. They say that more help is also needed to guide companies through their carbon credit journey. Choo with this report.
More than just any other regular firm in the central business district, this company's work has a larger impact on the world. Climate Impact X, or CIX in short, lets businesses offset their emissions through buying carbon credits on its digital platform. After a slow year in 2023 because of uncertainties over voluntary carbon markets, it's seeing a resurgence.
With the introduction of the Singapore carbon tax, you really have created a first of its kind globally that provides the right incentive for corporates to buy carbon credit. We do believe that corporate buyers in a much larger scale will come to market. Traders, banks, corporate buyers who don't have these expertise, they need to be helped to understand that they can trust what they're buying and they can trust the claims that they're making.
How it works is that a carbon credit acts as a permit. It represents a reduction of 1 ton of carbon emissions. These credits are generated through activities that reduce or remove carbon dioxide from the air, such as restoring forests or investing in renewable energy. Buyers then purchase or claim these credits to offset their carbon footprint. It's all in a bid to combat climate change by financing green projects. Singapore has already inked several deals at the recent Climate Change Conference, or COP28, in Dubai. It collaborated with countries like Costa Rica, Papua New Guinea, Senegal and Rwanda to generate and buy credits from green projects. It's all part of the country's desire to not just meet its own net zero goals, but support other countries in theirs. It's also to let the world know its potential as a carbon hub. While the concept is straightforward, one analyst says it will take time for the nascent carbon markets to grow.
The difficulty in Singapore is that most of the projects are not local, right? I mean, most of the projects are not homegrown. We do need better regulations so that we can do better cross-border transactions. There is a lack of standardized and universally accepted framework for carbon credits, and therefore for companies, I think there are a lot of confusion.
Meanwhile, he adds that firms should do simple checks on their own. They can research to see if green projects they're funding are legitimate, and if there are any consequences like displacement of local communities or destroying biodiversity.